Hey guys, it's Rhett Weaver from Intraland, Utah. A few things that I want to kind of go over: the jobs report from last week, what's been happening economically yesterday, and then what Powell from the Feds just barely talked about. He just got done a little bit ago, and I want to dissect that for you. Uh, for those of you that don't know, the jobs report, the BLS jobs report came out on Friday. It was way better than anticipated, much, much, much better than anybody could ever project or predict, which basically states that the unemployment rate's at an all-time low. Job creation and jobs right now are at an all-time high, and our economy's flourishing. You guys can Google this, take a look at it, dissect it yourselves. But the reason we bring it up is ADP earlier in the week, last week, basically said that there was a little over 100,000 new jobs. They do payroll for over 25 million different, basically people. And so they kind of have a good idea of what's going on. So the forecast for Friday was much lower. It's supposed to be less than 100,000. And when you kind of break out the numbers, it really was. But again, Google it, take a look at it. You guys can dissect it, and you guys can see the discrepancy between 100,000 and over $500,000 job creations. So as you know, or as you can believe, it obviously sent the bond market. And yesterday, the global economic side of stuff kind of in a flurry. They're trying to grasp this, kind of see what's going on. A lot of this is seasonal adjustment, and that's what you guys need to understand. Over 2.5 million people lost a job. But due to seasonal adjustment, basically the Christmas season, the holiday shopping, everything like that, that's why we're seeing kind of the gains in the job report come out a lot more positive than what people are thinking. Some people have also kind of pushed it towards COVID. A lot of people with not having an influx of money anymore, they got to go out and get jobs. And so the creation and everything is a little bit skewed. It's a little bit harder to kind of report on and see what's going to happen just because of what happened with COVID and people being laid off for a really long time. So we'll continue to watch that. Obviously, that's a big part of what's happening with interest rates. I do want to kind of go over the market right now to help you guys understand where rates are sitting. Really, what's been awesome ever since November, and we couldn't have asked for anything better because they've obviously come down, almost a full 1%. But as you can see, we've seen this huge decline in interest rates really since the month of November. We're sitting out here right now, but as you can see, green means interest rates are getting lower, red means they're getting a little bit higher. So you can really see here over the last basically 2 months, we've really had nothing but gains. We really haven't seen a lot of negative in the market. And they're predicting and projecting that that's going to continue to happen. Obviously, with the announcement with Powell, we're up 2 basis points. It's not really huge, but I think what you're going to see here on this level of support are things you're going to hold for a little bit. It's going to bounce a little bit. Not a whole lot going on in the market this week. There's going to be a few little things as far as bond rollovers and a couple other things happening, but not too much going on. So interest rates probably should sit still for a little bit. But we'll kind of watch this inflation report side of things continue to happen. And again, what Powell kind of had to say today with 2023 is that inflation is going to come down, which means that's only good for mortgage bonds. If you guys have any questions, feel free to reach out. Hopefully this makes some sense to you guys. Hopefully you guys understand a little bit better what's happening globally. Google it, kind of do your own research on it. But it seems a little fishy. And I think as we kind of continue to move through this week, some of that stuff's going to be exposed, and we'll kind of see what happens in the bond market due to that.